Greta, drivers everywhere are opening their auto insurance renewal bills and experiencing serious sticker shock, even if they have a completely clean driving record. Beyond standard inflation, what is the hidden factor driving these massive premium hikes that nobody's talking about?
Look, I think people understand that cars are more expensive to repair today. Parts cost more, labor costs more, weather related claims are up, and that's pushing premiums higher. But there's another factor that doesn't nearly get enough attention, and that's your credit history. Your driving record determines whether you qualify. Your credit history actually may influence how much you pay. So, in 45 out of the 50 states, which is an overwhelming majority of our states, insurers don't just look at how you drive. They look at how you manage your finances. Two people with identical cars, identical driving records, absolutely identical coverage can receive very meaningfully different insurance rates because one has stronger credit than the other. So most people actually don't know that. And what most Americans don't realize is that credit isn't just about borrowing money anymore. It quietly affects what you pay to live. It can influence your insurance, it can your financing costs, even security deposits. So that's why I often tell people that suboptimal credit is actually a hidden monthly tax because you end up paying more in so many different ways that just goes beyond borrowing.
Most people think their credit score is only relevant when buying a house or getting a credit card. How exactly do auto insurance companies use our credit data, and what is a credit-based insurance score?
Yeah. So most people are familiar with a credit score like FICO or Vantage, but insurance companies use something called a credit-based insurance score. It doesn't measure whether you'll repay a loan, but what it does is designed to help predict insurance risk with information from your credit history, things like payment history, outstanding balances, length of credit history, and other financial behaviors. Whether you think that's fair, that's a separate thing, but in many states, as I mentioned, 45 out of the 50 states, it's part of how insurance is priced. So the this is such an important factor by insurance companies, and most people actually don't know about it. So it's unclear. It depends on insurance carrier to carrier, but it is without a doubt an important factor in how much you end up paying in for insurance, car insurance, or even home insurance.
The data on this is actually wild. Some studies show that having poor credit can hurt your insurance premium more than getting a major traffic violation. Can you break down the shocking math of what someone with bad credit pays for someone with excellent credit?
Now, but nationally, drivers with poor credit can pay up to 200 to 300% more for the same coverage than someone with exceptional coverage, meaning a lower credit score costs more than just causing an accident. That's how important it is. The overall pattern is actually quite consistent. Drivers with poor credit often pay dramatically more than drivers with excellent credit, even when they have similar driving histories. And we're not talking about a few dollars a month. It can mean hundreds or even thousands of dollars more per year for exactly the same coverage. That's why I tell people improving your credit isn't just about qualifying for a loan someday. It can actually be a cost of your everyday, it can reduce the cost of your everyday life. And again, an underlying point around credit scores and your credit is, it's not just about chasing lower interest rates. People should be chasing lower premiums on insurance rates as well. And that's where your credit history is such an important factor.
From a psychological or behavioral standpoint, why do insurance companies care so much about our financial habits? What does missing a credit card payment have to do with how safely someone drives a car?
That's actually a very good question. Probably the question that I hear the most is, what does my credit score have anything to do with my driving? Actually, insurance companies aren't saying that someone who misses a credit card payment is a bad driver. What they're really saying is that decades of research and actuarial data has shown that there's a statistical relationship between certain credit characteristics and the likelihood of cost or the cost of future insurance claims. What they're kind of trying to say is that if you're responsible with your finances, you're going to be a responsible driver. And is there a causation there? We don't know, but I think they've just found a correlation. And that's what they're using, and the data is overwhelming on their side. And whether you agree with this or not, that's a policy discussion. But whether you like it or not, insurance companies are using this. And So as a consumer, by the way, whose consumers are getting rinsed these days on insurance costs, it's just important to understand the rules of the game so that consumers can use it to their advantage. And insurance companies are not always very clear about this. And that's why we really need to demystify how these rates are built and how your credit affects your insurance rates.
For someone who feels trapped by these rising rates, what is the fastest way to use this system to their advantage? How much can someone actually save on their insurance bill just by bumping their credit score up by a single tier?
Yeah. The first thing you should always do is you need to shop around. Insurance companies weigh factors differently. You must shop and you must look for the best rates you can find. And that's one of the things a lot of people don't do. And the second thing is work on your credit score. Working on your credit and improving your credit by just one tier, for example, from poor to fair, can cut your auto insurance premium by almost 50%. And improving credit is literally the highest leverage way to slash your fixed monthly costs when it comes to your insurance. And this is something that you should not ignore. And broadly, I tell people to stop thinking of their credit score as a number. You should think of your credit score as a financial asset. Every improvement can create opportunities to save across multiple parts of your financial life. So your credit score is actually an asset. Or it could be a liability if your credit score is not good. So it's worth working on it. And this is something that I live by and I tell everybody, your goal ultimately is not a better score. It's just a means to an end. The goal is actually to lower your monthly cost of living. And one of the ways to do it is your credit.
Trying to manually fix your credit while managing your daily life is exhausting. How do automated platforms like Ava step in to fix the root credit issues so drivers can start shopping for better insurance rates?
Well, that's why we built Ava. We built Ava to help people get control of their finances, starting with their credit, so they can save money and live better. That's been our motto, that's our mission, and that's what we will do every day. And the reason we exist is the problem isn't that people don't care about their finances. Everyone cares about their finances. Most people care about their finances. It's just that managing credit requires dozens of small actions over months or years, and frankly, life gets in the way. So I think that, and we believe that software should do more than show you just your credit score. Software can actually do a lot more to help with your financial life. And it should work actively on your behalf. So in Ava, we're building the platform, the autonomous features, and the seamless, frictionless ways to build your credit history, from your rent and utility payments to a credit builder card to a secured loan. All of these done in a seamless, simple way. And all of this is done behind the scenes and automatically doing the work for you so that you as a consumer can make smarter and better financial decisions without adding more work to your life. Your life is already busy, and software should be there to make it simpler. And my vision, my goal, my dream is that ultimately we want people to wake up one day and realize they're paying less for insurance, for debt, for all these other costs in their daily life, not because they became financial experts, but they have a financial advocate that is working while they were sleeping or going to their job. And that's why we built Ava.
If there's a driver watching this who feels like they're being unfairly penalized by a broken system, paying a fortune for car insurance despite being a good to safe driver, what is the first step they should take today to take back control of their money?
First, it's important that you don't assume that you have the best rate available. I think shopping and looking for rates is a very good habit, and there are lots of opportunities there that people miss out on. And second, because your credit impacts your insurance rates, it's important to understand and internalize that your credit score isn't actually permanent. It's dynamic, it can improve, it can get better over time, and you don't have to be stuck. And every improvement, every small improvement creates more opportunities to save money. And that is what you must understand deep down, that it can be improved. And broadly, I think that the shift in technology, and especially in finance, is that it's not just about understanding your finances. is continuously working on your behalf to improve your finances. And personally, that's what we're building at Ava. That's what I've been passionate about. And I always say that people think that improving your credit helps you borrow more money. I think improving your credit helps you keep more of the money that you've already earned. And that is empowering, and that is something that gives you agency. And people should know that in all of these cost of living issues that they're seeing, it can be improved. It is, many of them are under your control.